Title: Understanding the Basics of Option Trading in Simple Terms, for Beginners, Indian Market. Introduction. Namaste, traders. Welcome to our channel. Today, we are diving into the exciting world of options trading, breaking it down into layman's terms. If you've ever been curious about options but found them a bit intimidating, you are in the right place. Let's simplify the basics of option trading in the context of the Indian market. What are options? So, what exactly are options? In simple terms, options are financial instruments that give you the right, but not the obligation, to buy or sell an asset at a predetermined price before a specific date. Think of it like having the option to buy or sell something without being obligated to do so. Call options. Let's talk about call options. A call option gives you the right to buy an asset at a specific price, known as the strike price. It's like reserving the right to buy something at a fixed discount. If the market price goes higher than the strike price, you can make a profit. Put options. Now, put options work the other way around. A put option gives you the right to sell an asset at a predetermined price. It's like having an insurance policy for your stocks. If their value drops, you can still sell them at the agreed upon price. Option premium. Every privilege comes at a cost. In the world of options, that cost is known as the premium. It's the price you pay for the option. Keep in mind, the premium is influenced by factors like time remaining until expiration and market volatility. Option expiry. Options have a shelf life, they expire. The expiration date is when your right to buy or sell the asset ends. It's crucial to be aware of this date, as it affects the value of your option. Options with more time usually have a higher premium. Practical example. Let's put this into perspective with an example. Say you believe XYZ stock will go up. You can buy a call option with a strike price below the current market price. If the stock rises, you can either sell the option for a profit or exercise it to buy the stock at the agreed upon price. Risks and rewards. Like any investment, options come with risks. If the market doesn't move the way you predicted, you might lose the premium you paid. However, the potential rewards can be substantial if your predictions are right. It's essential to manage your risks and not invest more than you can afford to lose. Conclusion. And there you have it, the basics of option trading in a nutshell. Remember, this is just the starting point. As you gain confidence, you can explore more advanced strategies. Feel free to ask questions in the comments, and happy trading! If you found this video helpful, give it a thumbs up, subscribe for more content, and hit the notification bell to stay updated. Until next time, happy trading and Shubh Vyapar!